Well, thanks for tuning into the Stocks to Watch segment right here on BloombergQuint. Let me get in our guest, Dharmesh Kant, to talk about the 3 or 4 things that are probably top of mind today. Dharmesh, good having you. Hope all is safe.
Good morning.
Thank you. Thanks for joining in, of course. Can I start off with Indiabulls Housing Finance? The reason why we bring this up today, Dharmesh, is because of the fact that they have launched the QIP at a slight premium, shows the confidence. But also they have said that they are exploring options to partially divest stake in Oak North Bank. What do you make of these announcements?
See, everybody is in search of equity, and everybody wants to shore up their balance sheet as far as equity is concerned, and they want to get away with the debt as much as possible. But India's housing finance has lately been into number of news which has been contested, and the news are not good as far as corporate governance is concerned. I think divestment in North Oak Bank. They started it 5 years back in 2015, and so early exit. I don't know under this trying circumstances whether that bank is also questionable or why they are planning to do so. So that speaks about inconsistency in the various business forays they go into and they want an early exit. So that doesn't speak very good about the overall perspective of the management going forward. As far as Indiabulls Housing Finance is concerned, the company has very concentrated business portfolio. I mean, they are the ones who are being developers and people who have been buying into their homes. They are the financiers to them. So there's hardly any diversification of the portfolio as far as risk management is concerned. So there are better housing finance, companies which are pure NBFC and HFC plays. So maybe LIC Housing Finance or Canfin Homes would be a better bet. I would avoid this stock altogether.
Okay, from an investment perspective, yes. From a trading perspective, do you think these announcements could have a positive impact, Dharmesh?
Yeah, going by the way this market is and the euphoria momentum is in the market, one can get a 10-15% kind of a trading blip on the upside for India's housing finance. And that's the very nature of the stock. If you have seen it last 1.5 to 2 years, the moves are very violent. So for traders, if they are betting on the buy side, they may still gain.
Okay. The other one, of course, in focus is Reliance Industries. Can't take our eyes away from it, can you? What do you make of these developments? And does it provide fresh entry opportunities or fresh investment opportunities, Dharmesh?
See, there is the type of skewness which has been there in the market, and the options are very few as far as riding on the upside is concerned. So it may still give 15-20% kind of up move on Reliance Industries. It cannot be ruled out. I mean, 24,000-2,500 can be the stock price of Reliance Industries, but pure from financial angle, I mean, so much of equity raising, there's a cost to equity as well. And for debt always provides you some elbow room to, enhance your return ratio. So I don't see Reliance delivering a return ratio of around 15 or 16% by FY23 or 24. It won't be possible. From here on, the businesses will be more of a normal course of a business, be it even Reliance Jio, Reliance Retail. Refining is already under pressure. Petrochemical won't be doing great. So 10-12% kind of a return ratio, 15-16% kind of a CAGR you are expecting on the bottom line for the next 2-3 years. So I mean the best EPS which you can project for FY22 is 90 rupees. So I mean, so given the premium, if you give it 25 times of PE multiple of based on FY22 earnings, it can still has a headroom to go to 24,000-2,500, not beyond that. But that would be the point where I would be booking profit in Reliance Industries.
Okay, and this could well be a tactical call. Viewers, remember that Dharmesh is not talking about the really long term, but I think you got to take into account some of the points that he's mentioning as well. So interesting observations there, Dharmesh. Can we also talk about the tractor companies? I mean, today, for example, on M&M, there has been a buy call from a brokerage with a overweight rating, etc. Day before yesterday, I think Citi came out with a note on Escorts, the stock, or JP Morgan came out with a note on Escorts, one of the two. And I think people have largely been bullish on the tractor names. What about Escorts in particular, Dharmesh?
See, again, there's a skewness in the market, and because of the numbers have been good. I mean, last month numbers were very good, but that has to take into account the Hindu calendar, which was underway. I mean, September is a month of a Shraddh period where people don't buy vehicles, and then there has been extended 1 month more in the Hindu calendar. So the next festive season would start off from mid of October. So I think the purchasings were, done a bit earlier by most of the farmers, and agri segment has been doing well. My only concern about all this farm equipment and tractor in rural play has been by the time you end up FY21, I mean, for the month in the month of March, you will find most of the stocks are very, very expensive compared to the numbers, which as of now looks very, encouraging. So, I mean, Scott's, I mean, 55, 56 is the EPS, which it is likely to end up with FY21, and 60, 65 maybe for FY22, because there has been a lull period for 2, 3 years in the segment, and it's catching up now. Based on that, one can have a trading blip. It can still go to, it's already at 1200, it can go to, 1400, 1500 kind of a thing. So 15-20% more is there on the table to be make out from. But beyond that, I don't see any interaction going into play. So as the moves are, you can get a smart trading play as of now. But from investment perspective, I won't be putting my fresh money out there. Because it's just the euphoria which you have been riding as of now, and it can continue for a while.
Okay, Dharmesh, one quick word though, if you will, before we wrap up, and that's on financials. With all that's happening, and people are confused about this interest moratorium, etc. Very quick synopsis of what would it mean? Which stock should one watch out for?
See, Neeraj, if you sum it up, I mean, if the ruling goes against the banks as far as interest is concerned, so the amount would be very minuscule. The amount won't make any meaningful dent. It's more of a, the type of policy which should be into play that would be more questionable rather than, the dent which it will make. I think the dent from stress asset or the GNPs which will roll out for the during the later part of the year would be much more greater, which would hitting the bottom line rather than this interest case. What I would like to see in the judgment is whether it is only for this specific period, 3, 4 months or 6 months kind of a window, or it gets extended to the entire FY21. That would be critical to see here because that would determine the way of doing business going forward. Otherwise, even if the ruling goes against the banks, any dip which is there, I think everything is there in the price, and it does give you a very good, investment opportunity to select banks, which one can start buying out here. And my personal preference would be here, Axis Bank would be the top of the pecking order, followed by ICICI and HDFC Bank.
Axis Bank, followed by ICICI and HDFC. Okay, great. Dharmesh, so good having you today. Thanks much for taking the time out and speaking to us. Stay safe.
Thank you so much, Niraj. Stay safe. Thank you.
Thank you. And viewers, I hope you got some insights into this trading play in Indiabulls Housing Finance. Escorts looking stretch. Reliance, Dharmesh would sell at higher levels tactically, purely from a valuation perspective as well. And banks, very important judgment in store for us. Let's wait and watch how it shapes up. Thanks so much for tuning in today.